pension age to 68, always tax-free, work while on age pension not worth it. Those are just 3 of the biggest myths I see around the age pension. In this video, I'm busting 5 of the most common ones so you can make clearer, more confident retirement decisions. Let's dive in. Myth 1. Pension age is going up to 68. There have been a number of misleading articles and posts from what look like scam sites, claiming the age pension age is increasing to 68. That rumor then spread on social media, took on a life of its own, and understandably caused a lot of worry for retirees and pre-retirees. This is not true. The age pension age is 67 and there are no announced changes. With how easy it is to pump out posts and videos using AI, it's more important than ever to double check that your information is coming from a credible source. Myth 2. Age pension is always tax-free. Right now, the full age pension is $1,200.90 per fortnight for singles and $905.20 per fortnight for each member of a couple, which work out to be $31,223 per annum for a single and $23,535 per annum for each member of a couple. Many age pension recipients are Australian residents and qualify for the Seniors and Pensioners Tax Offset, or SAPTO for short. So even with the full pension plus a bit of extra income, they often end up paying little or no tax once you factor in SAPTO and the low income tax offset. But that doesn't mean the age pension itself is tax-free. In fact, a large part of what you receive is taxable income. Technically, the age pension payment that lands in your bank account is made up of the age pension basic rate, the pension supplement basic rate, the pension supplement above the basic rate, and the energy supplement. From a tax point of view, only the last 2 components are tax-exempt income, so the taxable part works out to be around 94% of your total payment. What really matters for your tax bill is your total income, not just the Centrelink payments. If you have salary or investment income and you also receive the age pension, the pension just sits on top of that and is taxed at your marginal tax rate. Myth 3. It's not worth working while receiving the age pension. A lot of people feel that if they take on extra work, their age pension will drop so much that it's like taking a big pay cut. Here is where that myth comes from. Under the income test, if you are single, once you go over $218 per fortnight in income, every extra dollar you earn reduces your age pension by 50 cents. When your income reaches $2,619.80 per fortnight, your age pension stops. If you're part of a couple, once your combined income goes over $380 per fortnight, every extra dollar you earn reduces each partner's age pension by 25 cents. When your combined income reaches $4,000.80 per fortnight, your age pension stops. So it looks like the more you earn, the less age pension you get. But that is not the full picture. Actual work income doesn't always cause your age pension to drop. There are 2 big reasons why. First, once you meet the age requirement and residency requirement, Centrelink uses means testing to determine how much age pension you can receive, whether that's no pension, a part pension, or the full pension. They apply the assets test and the income test separately, each producing an outcome. The test that results in the lower pension amount will determine your payment. About 82% of age pensioners in Australia are asset tested, meaning it's the level of assets, not income, that is limiting their age pension. In those cases, earning some extra employment income might not reduce their payment at all. The second reason is work bonus. Centrelink allows you to earn up to $300 per fortnight from employment without it counting towards your assessable income. On top of that, depending on when you submit the claim, there can be a one-off boost of $4,000 to your work bonus balance. This credit, combined with the standard $300 fortnightly exemption, allows pensioners to earn up to $11,800 of employment income before their pension payments are affected. So the reality is, actual work income doesn't always mean less age pension. In practice, you should first work out which test is actually limiting your payment, the income test or the assets test. And then check how much room you have got left under the work bonus before any actual work income starts to reduce your payment. Myth 4. No pension means no concessions or discounts. Many people assume that if they are not getting even $1 of age pension, they will automatically lose their pensioner concession card and all the discounts that come with it. That's not entirely true. Yes, generally, once you are no longer on age pension or other eligible income support, you must stop using your pensioner concession card. However, if your age pension stops only because of income test and your income includes employment income, you can keep using your pensioner concession card for up to 2 years while your payment is at new rate. I'll leave a link to the official Social Security guidance in the description if you'd like to read the finer details. For example, Frank was receiving the age pension. He then started a part-time job and earned enough employment income to fail the income test. So his age pension rate dropped to 0. In this case, his age pension is not cancelled. He is placed in an employment income new rate period. During this period, Centrelink still treats him as receiving age pension for the purpose of keeping his pensioner concession card. Frank must keep reporting his and his partner's income and any changes in circumstances each fortnight. If he stops reporting, his new rate period will end, his payment will be cancelled, and his pensioner concession card will become invalid. Now, even if you end up losing access to your pensioner concession card, the Commonwealth Senior Health Card and the Low-Income Healthcare Card are strong alternatives that can provide similar discounts and concessions. While the pensioner concession card is a gold standard, the other two cards still give you cheaper PBS medicines, access to bulk billed GP visits, and extra refunds through the Medicare safety net. State and territory government concessions vary a lot, and in many cases, Commonwealth Seniors Health Card holders only get limited concessions, which is why if you're eligible, it can be worth also applying for the low-income healthcare card to unlock a wider range of discounts. There is no assets test for either the Commonwealth Senior Health Card or the low-income healthcare card. They are both income tested only. But the income limits and definition of income are quite different, so it's important to check the latest details on Services Australia's website. The Commonwealth Senior Health Card in particular has a very generous income limit, which means many self-funded retirees can qualify. So not getting age pension doesn't automatically mean paying full price for medicines or other costs. Australian seniors have many different ways to access benefits and concessions. Myth 5. Using tips and tricks to improve your age pension is gaming the system, unethical, or even social security fraud. The rules around the age pension can get pretty complicated, which also means there are plenty of opportunities to improve your age pension outcome. While some strategies apply broadly, others only help specific groups such as homeowners, couples with a big age gap, or people with certain type of investments. Because of this, different groups can feel hard on by. And you will sometimes hear comments like, "That's gaming the system," or "That's just a loophole." It seems that the more clever or less well-known a strategy is, the more people say it this way, even when it's completely within the rules. But here's the truth, you shouldn't feel guilty about using legitimate strategies to improve your retirement outcome. These strategies are far more common than most people realize, and are regularly used by financial planners for clients who pay thousands in advice fees. Learning these strategies for free doesn't make them any less powerful or any less legitimate than paying a professional to explain them. And if you want to learn practical examples of those strategies, watch this video on 18 ways to maximize your age pension. Thanks for watching, I'll see you in another one.